Hi and good morning. I hope you're having a really productive Sunday. It's been a while that I did not provide any updates on the broader markets. So we're back here with the weekly review, uh, looking at all major indices, looking at some developments on macroeconomic indicators, new inflation numbers. And in today's video, like I promised in the last one, I am going to cover one stock, one investment that I have recently done. Again, it has come to you with a lag because I do not want anyone to replicate uh, what I do. I do not want any of my discussions to be taken as signals. So that's why there is a release which is slightly more delayed as compared to when I actually do it. In terms of the broader market indices, uh, there's no need to say anything about Nifty, Sensex. Uh, they're both on a bullish stance. Bank Nifty continues to be a laggard. CNX Finance continues to be a laggard. It's much more in a state of better structure than Bank Nifty. Auto is still a laggard as compared to the Nifty index. PSC is still a laggard. Metals has continued to lag. If you see from 3rd of June, Nifty made three new highs and metals failed to make even a single new high, which is saying that the index is either stalling behind as compared to Nifty, or there is not the same kind of opportunity that's available in other indices that is available in metals at the moment. Realty continues to uh, lag in a very big range. Energy also has not picked up this time. So see, every time we are making a new high in Nifty, you're seeing one or couple more high beta sectors are falling behind. So if you see in the original leg that we had with Nifty for the latest high that we made, we saw energy making a new high. But in this time's new high, the energy has also missed out. So we have no sector which is high beta, which has made the same kind of structure of a high along with Nifty, right? Potentially, we will see that in defensive sectors. We'll have the discussion once we go to the defensive sectors. If you see PSU banks lagging significantly, CNX Infra, again, this was one of the sectors which had made a new high with the Nifty last time, along with energy, but this time it has not made a new high. CNX FMCG, if you see, has made a new high along with Nifty. CNX IT, if you see, has made a new high along with Nifty, and CNX Pharma also has made a new high along with Nifty. What this is a very clear indication that the high beta sectors are falling behind. They are not the leaders of the market, and the low beta sectors, which is basically your FMCG, IT, pharma, to a certain extent media. I don't follow media as much, but these three sectors is what tells you what is taking the or leading the markets right now. The defensive stocks are what is leading the market at the moment, which is services to a certain extent, consumption to a certain extent, healthcare. But apart from that, the key and the high beta sectors of the economy, like the banks, energy, realty, metals, they are not pushing the markets higher. This is very typical of the market to do, to depend on high beta sectors, where once you see uh, the rather to depend on low beta sectors once you see high beta sectors starting to lag, right? So on a broader index level, definitely I can say that Nifty is in a very good shape. Although, as I've said earlier, I do not still feel that we are uh, very well placed in terms of the uh, the broader macroeconomic structure. So let's look at the macroeconomic numbers that recently came out. One of the most important one was CPI. If you see CPI, and this is from tradingeconomics.com, so a very good website if you would like to follow macroeconomics of various countries. You want to look at CPI numbers of the entire globe at once, you can. Uh, there are various other aspects in the website. Again, this is not a promotion of the website, but just something that I felt very useful. If we see, and I want to go back to the 5-year time frame, if you see the latest two inflations, the one that came in July, the one that has come right now in August, they're both well below 4% and they are one of the lowest in the past 5 years. That's a very good news in terms of the inflationary numbers. It's a very good news in terms of RBI monetary policy actions. Somewhere we started with the interest rate hikes, and probably now we are seeing a reduction in inflation that could be sustained. Again, what is sustenance? I want at least 2 quarters or 3 quarters worth of CPI inflations to stay well below 4%, right? Just because a couple of months have been lower. If you see, there were a couple of months here also where it was lower. But was that the case of a sustained inflation reduction? Possibly no. We had two more here. Was that sustained? Possibly no. If you see, it spiked from there like anything, reached up all the way up to 8% also, right? So we need a sustained move from here well below 4% or around 4% for at least 2 quarters worth of data, or even I would prefer even 3 quarters worth of data. That's when I think RBI would even really open about the discussion of a possible rate cut. So that's on macroeconomics. Now, if we move on to something like what stock have I invested recently, uh, it's Ask Automotive Limited. This is basically a company that is a leader in advanced braking systems of two-wheelers. Uh, and the way the two-wheeler market is picking up in India, it has it has significant growth opportunities, uh, and they're becoming more and more advanced with all the mapping, etc. The braking systems. Uh, if you look at the automatic stops that we have on signals, you don't have to apply brakes. All of those technologies are getting used with and with enhancements on ABS. So the debt to equity is a little high, but it is well below my tolerance of zero point 0.5, right? I do not invest in any company which has a debt to equity of greater than zero point 0.5. So why I found this company an important investment opportunity for me is, first of all, uh, this is one of the newest companies that has gotten listed on NSE. So the listing was somewhere in about November 2023. I waited for a couple of quarters to see what it's doing. So in uh, December, the EPS was around at 2.53 as compared to December 1.48. That's a very big jump. And the same happened in March, 1.14 to 2.42. And the exact same thing happened in June, 1.77 and 2.88. That's where I took the decision to buy it. Again, if you see, the operating profit margins are not really amazing, but they are managing it well. It's quite significantly uh, good in terms of the rates, even on a yearly basis. Now, what I am expecting, if we see borrowings, there are some long-term borrowings, so the short-term borrowings are not many. The long-term borrowings are a concern, but let's see how the debt goes on as we move forward. In terms of the fixed assets, you see the lands, the buildings have been invested into, the plant and machinery has been invested into, so they are looking at uh, growth runs to come up. If you look at cash flows, almost positive cash flows every single year except 2 years. And when we drop down into it, we see that the high cash flow output was all towards fixed assets purchased. So they're not really spending money on something that is not leading to their growth engine. So I'm okay to have a couple of years of negative cash flows as long as they are getting, uh, deployed into the correct region. So if you see 298 crores uh, on fixed assets, 154 crores on fixed asset, and 285, that is nothing but capex, right? And that's what we look for in any company. It has a good steady ROC of well above 24%, and I think the promoters have a good stake in the company, and that's where I believe that this is a good investment opportunity. Now my buy price was I think somewhere in the range of 375 to 400. Again, there is one important thing that I've done here is I've not position sized everything uh, in one go. Because like I said, I'm not very comfortable with the way the fundamentals and the broader markets are acting. So there is some bit of caution with which I have invested. Uh, I have just reduced the position size. This is one of those stocks, right, where I'm not, uh, where I'm not worried to average out if the prices come down, right? So if it's a good fundamental stock and if prices comes down, I think that's the best opportunity that is available. Now, again, what is my horizon on the investment? It is definitely long term. I do not wish to trade this for any of the purpose. I never trade too much in the stocks unless we are very overvalued in the market. I trade generally in Nifty, Bank Nifty options, but I do not trade more on the stock side of it because you miss out on a lot of big percentage rises that come up. So Ask Automotive is one such good investment that I found. I do have a couple of more investments, but I think I want to put them in a separate video of only the stock analysis that I've done. Maybe sometime during this week I'll try and compile a video uh, to explain on that. So that's it for today. I think I hope you found this insightful. Like I said, I don't see any worries on Nifty. The high beta sectors are lagging. The defensive sectors are what is supporting the broader market right now. Uh, Inflation needs to sustain well below 4%, and an investment opportunity that I looked into Ask Automotive. It's about maybe 15% up from where I bought it, but I've shared it. Uh, like I said, it's still not uh, a bad time to look into opportunities, and this is one such opportunity. What I do to make sure that my risk is very, very minimal to begin with, I reduce my position size and slowly increase it as I progress and see the markets bettering. With that, I wish you good luck and good investing and have a good rest of the weekend. Thank you.